Ca să ținem mâna așa puțin. Da?
Mm-hmm. So let us get connected first. Okay. Hi, Michael. How are you?
Hello, Anna. Happy to be here. Thank you for having me. Very
Wonderful,
well.
wonderful, wonderful to have you here. So I thought that I will give my audience a treat today. So hi everyone, thank you for joining. I know this is a bit
Hello.
impromptu. I know, I know this was not scheduled, but I'm absolutely sure that you will enjoy it. So we are talking a lot about growth and how to grow our subscribers and how to grow our base for our newsletters. But what do we do in order to grow also financially and monetize? Because let's face it, building multiple income streams is not only about building an audience, it's about building purpose in our life as well. So that's why I have here Michael, who is one of my gurus in terms of investing wisely and monetizing and everything finance related. I'm super thrilled to have you here, Michael, and talking with our audience. I'll let you maybe just briefly introduce yourself if you want, and then we'll get to the core of our
Sure
discussion.
thing. Sure thing. Well, first and foremost, hello everyone. Happy to be here. And of course, a big thank you to Anna for having me and hosting this live session together. You'll have to excuse me a little bit because my phone stand kind of decided to break today. So I'm kind of hand holding the phone. So the camera will be a little bit wobbly. Other than that,
Oh,
I'm all set. And really, really interesting topic that we've chosen to, I don't know, kind of riff off today here. Like, let's say you have a little bit of income going for you. What's the best way to kind of like use the money to make more money? Because that's the goal, right? Okay,
exactly. Exactly. Sorry to hear
sure.
about your phone. Okay, we'll try not to,
Yeah.
make it very hard for you. So this is
No,
as
no problem,
little
no
as
problem.
possible.
So you asked me to do a short intro, a little bit
Yeah.
about myself. I have right now I have 20 years of combined experience in the markets. I've worked with hedge funds, I've worked with investment groups, and mostly my top area of expertise is macro research and kind of
Okay.
like identifying the best opportunities to invest your money. I'm not very I mean my approach is not very prone to risk, but rather my whole approach philosophy is like maximizing your dollar per unit of risk. So I'm always careful of how much risk we're going to take upon ourselves and how do we maximize our investments on that. But this is
That's
just theory. So whenever you want, we can like start going like putting the theory into practice because that's the most important bit, I think.
Yeah, definitely. Thanks so much for that. And guys, please, the ones online, go ahead and check out his content. I think he's really throwing gold out there. We'll talk about some promotions that I know you're having for this week very quickly on how to invest if you are just in the beginning. I think that what everyone wants to know, and by the way, if you have some questions, and I'm talking to the audience now, if you have some questions, put them in the chat. Okay, so we'll address them no matter how basic or how advanced they are. I think you will prefer if they're advanced, but let's let's tackle everything. Put them in the chat and we'll try to go through them. Michael, tell me, if I am just in the beginning, so what are the key
Mm-hmm.
things that I need to know in order to start investing? And let's not say I'm in the beginning as I have no idea what investments are or what crypto is or what stocks are, but rather I have idea, okay, but where to start from there. I know about Bitcoin, I know about Nvidia, okay,
Right.
where do
To
I
be
go from
honest,
there?
right, right. Okay. To be honest, I'd start even a little bit more basic than that. So
Okay.
I think the first thing you need to do when you are serious about, like building your wealth is kind of like start with forming the good habits, right? And
Oh,
the good habits for building wealth are saving, right?
mm-hmm.
And not taking up debt. As long as you're debt free and you're saving, I don't know, $5 a day, $10 a day, right? You're way ahead of the curve. Because most of the world's population right now, most of the world's population, and kind of like this makes you realize that we also benefit from an amazing privilege in the position that we are. Most of the world's population is A, heavily indebted, B,
Yeah.
absolutely unable to save even $5 a day. So I think
Okay.
the start point is have no debt, save some money. If you have
Okay.
debt, right, the way to start is put aside whatever you can, like it can be $5 a day, $5 a day, and use your savings to clear off your debt. Like, and when I'm talking about debt, I'm talking unproductive debt. If you have debt like you took on loans to grow your company and you invested those loans in your company, and now that debt is making you more money and the interest that you pay on your debt is really small compared to the ROI that you're getting. Okay, that's not a problematic debt. But
But
if
what if I
you
bought an
have,
iPhone on that?
yeah, that yeah, that's the kind of debt that we want
Oops.
to clear off, right? So credit
Mhm.
card debt, shopping debt, student loans, everything, stuff like that, we want to clear that off. So I think that's the
Yeah.
first step, clear off your debt. Then once you have cleared off your bad debt, right, you
Mm-hmm.
can then start using your savings to kind of invest. And
Mm-hmm.
99% of the people in the world cannot outperform the big indices like the S&P 500, the Nasdaq, the Dow Jones. It's a full
Mm-hmm.
errand. It's a fool's errand for like 99% of the people in the world to kind of like try to stock pick or try to like time the market, pick some investments, whatever. The best
Okay.
way
So
to
what do
do
we do?
it is also the safest way to do it. Kind of like set up recurring buys weekly, monthly on the big indices,
Mm-hmm.
right? The S&P, the Nasdaq, the Dow Jones. Apart from that, I would also keep a part of my savings in cash at all times,
Okay.
right? And kind of like move that cash around between currencies depending on how the dollar is doing. So if the dollar is rallying, like the dollar is gaining strength, it makes most sense to keep your money in dollars. If
Mm-hmm.
the dollar is like losing strength, then it makes most sense to keep your money in other currencies that will appreciate against your dollar, so that will preserve your purchasing power. And those other
Okay.
currencies, like big, we're only looking at big currencies. They can be the euro, the British pound, the Swiss franc, the Japanese yen, mostly,
Okay.
right?
Okay.
So in terms of currencies, like a little nugget right now, the dollar is kind of approaching a tipping point. It's been rallying like since forever. So now it's approaching a tipping point where the dollar will enter a correction. So the dollar will become weaker.
Mm-hmm.
And right now, for example, the Japanese yen is kind of poised to grow against the dollar because they're about to raise the interest rates on the Japanese yen. So maybe if you want to keep apart, so and it makes 100% sense to do it, keep a part of your portfolio in cash, and then as the dollar is weakening, keep it in other currencies again, like the euro, British pound, Japanese yen, Swiss franc.
Yeah.
Personally, I think the euro is kind of trash anyway, or mostly trashy. So I'd keep it in a Japanese yen or Swiss franc.
Okay. We
Other
have
than
a
that,
little question. If I can interrupt
yeah,
you just for a second, or I'm sorry. You wanted to.
yeah.
So I think that the question is, how do you move the currencies around? Multiple bank accounts. Uh, how does that go?
Well, at most banks. right? You can have attached accounts to your main account, attached accounts in foreign currencies. And most banking apps give you the option within the app to exchange between currencies.
Okay. Okay, Philip, I hope this answers your questions. And Ashley, I think that what he was saying was that he was the dollar is right now at a tipping point, but before we're going into a deep analysis on this, how about what should someone in the beginning pick from? Should they go into crypto? Should they go into dollar? Should they go into S&P? What should they pick on?
The best place to begin with is keep a part of your wealth in cash and another part put it in the major indices like the S&P, Nasdaq, Dow Jones,
Okay.
right?
Okay.
And then you can diversify to other streams and to other asset classes, right?
Mhm.
If you think like a lot of people are now really on the edge and uncertain with Trump's inauguration, if you think things are going to go kind of like to shit, then you put a sizable chunk of your wealth into gold, right? If on the other hand, you're betting on growth and you're betting on growth towards the riskier part of the asset class or the riskier part of the curve, then you put it towards riskier assets like crypto.
Got it. Got it. Okay. So here's another thing. What are the biggest, I don't know, mistakes, that someone in the beginning makes when they start investing, whether it's crypto, whether it's dollar, whether there's something else? So what should we watch for, especially in the beginning? Because everyone is enthusiastic. I'm not going to ask, is it a good time to invest in Bitcoin? Obviously, the best time was yesterday, or
Mhm.
better the charts. But what are some of the mistakes that someone in the beginning makes?
The biggest mistakes are psychological. So either you're, rushing into a trade, rushing into buying something because of fear of missing out, because of social pressure, because of greed, right? Or let's say you have a solid investment, the market drops a little bit, you're panicking and you're panic selling. I think these are the most basic mistakes that everyone makes. Everyone, no matter their level of expertise, no matter their experience in the market, everyone is subject to psychology.
Okay.
So, always, when it comes to trading, investing, finance, whatever, the biggest risk factor is your own psychology, right? So, fear, greed, stuff like that. That is the biggest risk factor, and this is where most mistakes come from.
Okay. Okay, got it. And I know that we are a bit time bound here, so I don't wanna drag this for a very long time because I know you are also having in-depth analysis by different topics on your website. So why don't you tell the audience here what they can get when they read your analysis, your daily analysis, and when they watch your webinars, and how they can benefit, because I know you are having quite something exciting going on this week and that you will be posting right today, I think, even after this live.
Right. So when people read my analysis and in my Substack, as I said again, I cover mostly macro research and macro topics. And what I like to do is I like to find moments of maximum opportunity in the market and then present those opportunities in a way that everybody can benefit from them. Again, my approach is very risk aware. So my approach is like maximizing your profits per unit of risk.
Okay.
So, and my analysis, when I say macro analysis, I'm analyzing the like geopolitical environment, the financial environment, at the local level in the US and both globally. And I'm trying to ascertain where the capital is flowing and where the markets are going. Like what asset classes are receiving the most liquidity and where does the capital flow? Because basically, if you kind of like if you're able to understand where capital flows, when
Mm-hmm.
and how, then you kind of like go with the flow. And
Yeah.
most often than not, this sort of approach, while carefully managing your risk and again, your own psychology, is what allows you to win the game. And the target, right, is to outperform the broad market indices. So an index like the S&P, right? That's around 20-24% annually on a good year. Once every
Okay.
4 years, the S&P has a sort of bearish correction. So
Fantastic.
overall, right? So if overall, over a long time frame, the S&P delivers what, like 12%, 14%, 15% compound annual growth, right? What you're trying to do is outperform the indices, and this is what my approach is geared towards. Understanding the macro, understanding where, how, when capital flows in order
Mm.
to outperform the indices while maintaining a very secure risk profile.
Okay, fantastic. So I know we just touched the top of the iceberg here, and it takes a lot
Mhm.
of learning and doing and practicing, and that's why you are here, right?
Yeah,
And that's why someone who is interested in investing and having a proper analysis before they jump into things and not having an emotional decision, they need to read and follow you. So I definitely
exactly.
invite you to check him out and to subscribe to him. Why don't you tell us what they should expect next? So what is it that you are going to share next that is going to help people, not necessarily in the beginning, but
Yeah, so
yeah,
for
have
example, for
have steady.
today's, in a couple of hours, I'll be posting my an article where I go over 5 trades that I'm doing now that Trump's in office. For me, personally, for me, Trump being in office is a very bullish environment. So I'm really excited and I'm really bullish on Trump's presidency because I think we're finally going to see a sense of normality and kind of like common sense return. And I'm really hoping for that.
So do you think
Uh,
this is going to be great for the market?
I think I think this is going to be really good for risk assets. Think the former administration, Biden's administration, unfortunately left Trump with a really horrible economy. Like for the last 2-3 years, they only did the wrong things and they did a lot of damage. And unfortunately, he's going to have to contend with that. I think in the first, at least the first quarter of 2025 and maybe like late Q3, Q4 of 2025 are going to be great growth for risk assets, great growth domestically for US industry. Then we're going to have to contend with all the nasty things that the previous administration did. But I think Trump and his administration will prevail and will manage to kind of like salvage stuff by the end of 2026. And then I'm expecting 2 more years of very positive growth, like end of 2026 into 2027, 2028. I'm expecting things to go really well.
So what does this mean for everyone? It's a good time to invest.
I think personally, I'm taking on that risk that right now, kind of like in the short term, at least till the end of Q1, it's a good time for growth in risk assets.
Okay.
Then I'm kind of my outlook is it's going to be slow in Q2, Q3, and then Q3, Q4 is going to be great again for risk assets. Again, I'm having a post that I'm gonna be launching on my Substack, I think in a couple of hours, right? And that post will detail 5 trades I'm looking for to capitalize. right now on the like the first quarter of Trump's presidency.
Okay. So thank you so much for that. And guys, we're not doing politics here, okay? So this is purely from a macroeconomic and investing perspective. Now, feel free to make your own judgments. I think we just open squeezed a bit the door here with a lot of nuggets, gold nuggets that I know Michael has on his publication. Personally, it helped me invest, and actually, I had huge ROI on my investment. So thank you so much for those tips. I'm
Yeah,
going to tell
well,
you exactly
happy.
which ones. I don't want to I don't want to say on what I invested, but I made some small investments that really paid off, and I was surprised by how easily it became when you have the
Mhm.
right knowledge behind you. Now, my community here is very used to have also a little offer from my guests, although we have just started on something they can also take home besides the great knowledge and obviously coming and following you. So is there a kind of offer that you can make to our community here for following you and getting better at investing?
Yeah, well, usually I kind of steer my subscribers towards the uh, annual plan. Uh, all I can say, guys, is have a look at the post. There's gonna be an offer. I think it's going to be 27% off on the annual plan.
Okay.
All you have to do is kind of like read the post, subscribe, upgrade to the annual plan, and you will get the full detailed analysis and all the breakdown necessary in
Great
order
points.
to
Just like I
like
like it.
again, my mantra is maximize your profits per unit of risk. So keep risk in check and then maximize the profits.
All right. Well, thank you so much.
Thank you as
I saw
well.
from some of the comments that this was very useful for many
Hopefully,
people. If you
hopefully.
have some more questions, and I'm sure you might have, and if you want to go into detail, please reach out directly to Michael. Obviously, check out
Yeah,
his
you
public.
can. Right. So if any of you like read my articles, I know my articles and the stuff that I'm writing is can be sometimes difficult to comprehend. So if you're a reader and kind of like let's say you read an analysis and there's something you don't understand and even better there's something you don't agree with, don't be afraid, feel free to reach out and kind of like DM me directly. I love chatting about microfinance, geopolitics, trends, whatever. DM me
And
directly and I'll be more than happy to kind of like go over things with you, maybe give you some extra explanation, extra pointers, make myself better understood.
and I can vouch for that. Like I can take your word for it because I came to you like, hey, I have no idea where to start. So can you talk to me in English and tell me, where to begin? But obviously, you don't have to be such a beginner like me. Thank you so much, Ashley. I saw your comments. Kathleen, I saw your comments. Thank you so much, Monica.
Yeah,
Phil,
if there
uh,
are yeah, if there are questions from the people who joined, because I
I
see
think there
there's
is
a
one
lot
more.
of people joined, but I am again as hand holding my phone, it's kind of
Yeah.
difficult for me to get the questions. So if you can get them, Anna, I'll be happy to answer like two, three, four questions if you have time.
So I think we have one more that was coming up. I
Mhm.
think again
Sure.
it's yeah, Philip, Ashley. Thank you so much for your comments as well. Would you advise the places to start for people who earn a different ladder, 10 one yeah 1,000 per year, 10,000 per year, 100,000 per year?
Mhm.
Um, so, would you advise to start differently for different type of wealth that you are currently having?
Depending on like the kind of disposable income that you have, right? So we're talking about disposable income, income that you can afford to lose, right? So guys, be very careful. Any sort of investment, like investing in something that's bulletproof, basically, the S&P 500, right? That can't go wrong. Even more bulletproof than that, buying US treasuries, right? Buying US debt. That's basically as bulletproof as it gets. Everything comes at a risk. Everything comes at a risk. So you use for investment only money that you can afford to lose. The more money you have that you can afford to lose, right, the more you can allocate towards riskier stuff. So you only have like $500, $1,000 available. I know this advice is not going to sound very helpful because it's not going to be this sort of like put $1,000 here and then in a couple of years you'll have 100K. It's not going to get you that. But from my perspective, if you only have like $500, $1,000, put it in the S&P or the Nasdaq or the Dow Jones. If you have more money than that, then you can gradually allocate toward riskier stuff, emerging markets, Bitcoin, right? You have more money than that, okay, throw it into some even riskier cryptocurrencies. Throw it into Solana, throw it into Ripple, throw it into Dodge, right? But the more money that you have, the more you allocate towards the riskier side of the risk curve, the less money that you get. Even if this means slower growth, protecting your portfolio, protecting your wealth is much, 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 much more important than growth.
Yeah.
Always, from my perspective, okay? And this is just a personal opinion and obviously like a personal piece of advice. But always protect your wealth before thinking of growth,
Yeah.
right? So for me,
Okay.
if you have less money, put it into bulletproof stuff like US Treasuries, the S&P, the Nasdaq, Dow Jones, gold, right? Another bulletproof stuff, gold.
Yeah.
Okay?
How about the German mark? Like dollars in Germany, Ashley is asking. Do you have an opinion about that?
About the German index, the DAX. The German
I
index is okay, but Germany is being dragged down. The German economy, the economy of Germany, is being dragged down by being in the EU at this point, right? They're not able to maximize their growth because they're dragged down by being in the EU and all the stupid bureaucracy and policies and stuff that goes on there,
yeah.
right? So
Okay.
Germany is great, but uh, I think if you have money to invest, I'd invest in the S&P before going and investing into the DAX. The DAX, the DAX, is the equivalent of the S&P for Germany. So it's the index that's tracking the public companies transacted on the Frankfurt Stock Exchange, right? Myself personally, I'd invest in the US before investing in Germany.
Okay. And obviously, you guys need to make your own decision based on your risk factors and your
Obviously.
own
This is just
analysis.
personal
Yeah.
opinion,
So
right? So it's not
start.
financial advice, no nothing. It's just what I do with my own money.
Thank you. This is really,
Sorry.
really helpful. The more money you have, the more risk you can and should take. Always protect your wealth before thinking of growth. Yes, Philip, I'll definitely remain with this call out as well. Guys, I really hope you enjoyed it. Again, have more questions, please send them directly to Michael. He will love to answer to you. Definitely subscribe to him. He's having also this fantastic offer, and the post that is coming today that I think is going to be very, very useful for everyone. And hi, let me know if you would like me to have more lives like this, with more insights into things that are not necessarily related to Substack, but what we do, outside Substack. So, Michael, thank you again so much.
Thank you for
This has been
having
really
me.
useful.
Thank you for having me. It was wonderful being here. And of course, thank you for all the people that tuned into our little conversation. And thank you for your kind words. Like I saw a couple of comments and they were really, really supportive. So thank you very much for that. And again, Anna, thank you for hosting this session. I've been a paid subscriber to you, and I can attest that
Oh, thank you.
you know, yeah, I've been a paid subscriber, and I think before joining your paid subscriber program, I was really struggling with growth. So I started in on Substack kind of like in October last year, kind of struggled on growth till December, and kind of like I would say within 7 to 10 days from joining your program and kind of putting into practice what you're teaching, using your templates for notes, going into the Notes Boost chat, kind of like getting into the program. Within 7 to 10 days, I really saw tangible results in growth, like the
That's amazing and so
growth
kind
curve
of
for free
you. And
subscribers and the conversion rate definitely jumped up orders of magnitude. So thank you for
thank
that
you
as
so
well.
much. Thank you so much. I really appreciate that. And I really appreciate you being here. This has been super useful to me. You are one of my favorite creators here on Substack, and I can't wait to see you grow. And maybe we have another session like this, sometime
Yes,
soon to
anytime,
make a follow up.
sure, anytime. I'd love to. I'd love to. Thank you again for having me, and thank you for everyone who has joined. Right? Have a
Take
great
care,
day, guys.
guys.
Bye bye.
Bye bye.